Hello, my name is Chris Shea. I'm a financial advisor with BPS Financial Services, and this is a presentation on keeping it safe, with it being your money. So what are we going to talk about in keeping it safe? And what do you want to learn about it? We know the agenda, ground rules, they're pretty simple. If you got questions, ask them to me, reach out. Be happy to get back in touch with you, see how we can help you out. And I'm going to introduce myself. So the objectives: recognize how federal deposit insurance protects deposits. You hear about the FDIC a lot. We're going to go over it. We're going to talk about recognizing identity theft. What can go on with that? Recognize insurance, how to help manage your risks. Talk about the need to plan for unexpected death or disability. Big topic that I like to talk about is preventing elder abuse. Lots of it goes on out there. Look for ways to make sure it doesn't happen, and describe ways to be prepared for disasters. So let's jump right into it after I introduce myself. Again, Chris Shea, financial advisor with BPS Financial Services. I'm a financial planning and implementation partner with my clients. What does that mean? I help them figure out where they are, where they want to go, and develop the plan to get from A to B. Sounds simple, but there's always challenges that step up. We got to figure out ways to make it happen. Well, let's talk about keeping it safe. What do you want to know? What do you want to learn about consumer protection laws and regulations? Truth in Savings Act was put in place to protect you, the consumer, against companies. Requires financial institutions to tell you the terms of deposit accounts, checking accounts, savings accounts. They help you to be better at making choices about what you want. They'll tell you interest rates, they'll tell you fees. All of that's got to be disclosed to you in the Truth in Savings Act. Take advantage of it, find out what the fees are, find out what the costs are, make better choices with your money. Electronic Funds Transfer Act and other regulations. Again, there's a lot of money out there that can be done now electronically. Everyone's got a phone. You've got apps that you can transfer money to and from people. Make sure you limit your liability against unauthorized use of your ATM through this act. The Expedited Funds Availability Act limits the time it can hold a check deposit in your checking account. They used to be able to do it a long time. Now, usually they got to put the money in there within a week, regardless of how much money it is. And the FDIC insures against funds in your deposit account. Again, if you got a checking savings account, there's up to a threshold. You're protected against that. There's an activity guide associated with this, and there's activity 1. Read scenarios, answer the questions. If you want to talk to me about it, great. If you want to talk to somebody else, talk about it. The only way to figure out where you're at and what might be a good idea is to talk to other people. Listen, learn, also give some advice potentially, and figure out what is in the best interest in each one of these examples. Protecting your deposit accounts. The FDIC insures funds in deposit accounts, including checking, savings, money market deposit accounts, and certificate of deposits. These are things for typically at a bank. They're federally insured up to a certain dollar amount. Insurance. No one likes to talk about insurance until you need it, but insurance is important. It should be used for expensive and unexpected, not for everyday bills to pay. These are for big things that come up that are unexpected. A tree falls on your house, your car gets totaled. Big things, not you got no minor fender bender and you need to repair a headlight. That's not what insurance is for. Those things are going to happen. Insurance is for the big things. You got single accounts, you got joint accounts, you got revocable trust accounts, short retirement accounts that can be covered. And again, standard minimum deposit insurance amount, $250,000. Lots of insurance out there. There's a lot of professionals out there. Try to find a reputable independent insurance advisor to talk to you about how to make sure that you're properly covered for whatever you need. Homeowners, car insurance, liability insurance, lots of things out there. Single and joint accounts, right? You go to the bank, single accounts, pretty simple. It's owned by one person, insured by the SMDIA. Joint accounts, two people or more, insured up to the SMDIA for each co-owner. So if somebody's got a lot of money somewhere else, they might not be insured. It's all going to depend upon each individual. But again, there's different types of accounts. Retirement accounts. Retirement's a big topic of conversation. Laws are coming out about it more and more every single day. But there's individual retirement accounts, IRAs, Section 457 deferred compensation plans. These are for a lot of the government institutions. Self-directed defined contribution plans, 401ks, 403bs, KEO plans. All these things are ways in which you can save for retirement. We have a whole topic of conversation about this, another complete presentation that if you want to go into, you can learn more about. Revocable trust accounts. These are when people put things into a trust so that things can be transferred upon death. All right, payable upon death or in trust for accounts, established in the name of a formal revocable trust, living, family name, whatever. Provided the owner of a trust, number of beneficiaries come on to it, up to the insurance limit, and they're all based upon the trust held at the same bank. So if you have money that you want to transfer to people, a trust is a really good way to do it. Everything's written into the trust. Things will occur the way in which you want them to. A way to keep your money safe in case something happens to you. Now I'm going to do a little game of identify the account. You get single, joint, revocable trust, and a retirement account. Frida, Rome, has $1,400 in savings at a Sawmill Savings and Loan Company. That's a single account. She's by herself. She's got money there. Trey and Josie deposit $500 in the savings account together to start a college fund for the new baby. That's a joint account. Homestead contributes $50 a month to an IRA through his employer. That's a retirement account. Then Marcus's grandmother opens a savings account for $2,500. Marcus will receive in the event of her death. That's a revocable trust. Just examples to help you get your head around what kind of accounts they are. Non-deposit investment products. These are things not covered by the FDIC. The FDIC does cover things. They don't cover other things. A CD for $10,000 that Robert takes out on one side, a mutual fund for a bank that fails. His CD is covered by the FDIC. The mutual fund is not covered by the FDIC because it's an investment. Make sure you understand where your money is and the risks and the returns of both of them. Privacy notices. Big deal now with social media. Privacy, privacy, privacy. There's all sorts of privacy notices that are out there. Companies have to disclose this to you. They're required by law to how they handle your personal financial information and your personal information in general. You have the right to opt out from sharing personal information. The number's right there. You can see a lot of notices. Initial privacy notices, annual privacy notices, notice of change in policy. Sometimes you want to pay more attention. Sometimes not that big a deal. It's all up to you and your privacy because it's your information. Take control of it. And again, you've got an opt-out prescreen.com where you can opt out of being solicited for investment offers. Identity theft. Thieves steal your personal information and pretend to be you. We see it all the time. I see it with friends on social media. Their accounts get duplicated or hacked. People pretend to be someone else. It happens. all too frequently. If it's not detected early, you can face months or years cleaning up something that goes awry. We got identity thefted a few years ago. People started taking money out of our checking account. It all came back because it was FDIC insured, but it took a couple of months to get all cleaned up. Wasn't a lot of money, but it was enough to make it a hassle. So make sure you're on top of it. If someone does steal your identity, the faster you get on it, the faster it'll go away. Common forms of identity theft. Again, you see these all the time. Phishing emails appear to be from a legitimate source, but they're not. Click on this. You've got a package. You've got money coming to you. Something happened to someone. You've lost your access to something. Check the email address it's coming from. If it doesn't match the company, probably phishing. Don't fall for it. It's hard, especially with your phone. The email address doesn't always pop up. Try and take some of those emails on your computer where you can actually do the research and check out what the email address is from. That's what I try and do. Farming, fake websites seeking personal and private information appearing legitimate. A little bit harder now, but they do exist. And skimming, where they use storage device to obtain credit card and debit card numbers. All right, if some of these happen to you, Federal Trade Commission gets right on it. Identity theft, get on it, take care of it, stop it, move on with your life. Again, inside the activity guide, we've got some self-checks for where you're at with borrowing money responsibly. Go through, take it, see where you're at, see where you can improve. Private participation guide. Victims of identity theft and fraud alert. First thing, file a police report. Then contact your creditors, follow up in writing. Ask for verification that disputed accounts have been closed and fraudulent debts have been discharged. Look for it, okay? Initial fraud alert can be done within 90 days, extended for 7 years. They might have to secure some things for a period of time to just check on things. And then you can file a complaint with the FTC as well. But you want to make sure you get on this as quickly as you possibly can. It's happened to me a couple of different times. Best thing to do first is file the report, then contact the creditors, because the creditors are going to go to the police and say, was something filed? They'll say yes. It looks better on your side. Again, if your wallet or purse is lost or stolen, file a police report. Got credit cards in there? Cancel them. Place a fraud alert on all your credit reports. You can contact your credit companies. We got a whole presentation on credit. Report the loss to your bank so they know what's going on. Contact major check verification companies so that if checks are being written, they know they're fraudulent. Get a new ATM card with a new number, and you're probably going to wind up, if you got a checkbook in there, getting new checks as well with a new checking account. Can be a bit of a pain, but again, keep it safe. The pain will go away after a month or two, but at least you're safe and nobody can steal your money through the loss of a purse or wallet. Elder abuse. This is a big one for me. I've seen it firsthand how it happens with people. You have people that want to take advantage of elders because they have money and it's not necessarily in their best interest, but because they might love someone or want to help someone, they help the abuser out. Hopefully you can help stop this. It might mean they're taking money or property. It could be a family member. In most cases, it is a family member or loved one. All right. They could forge signatures, use deception to get elderly to sign legal documents. They're confused. Stuff gets signed over all the time. They can use property or stuff without permission. Use cars. Just because the elderly person can't take advantage of, can be taken advantage of because they can't get out and use their car as much. Promising care in exchange for money and property and then not following through. You see this all the time. Someone says they're going to do something, give me cash advance, they never come back. Don't let elders fall for this. And then there's telemarketing, right? People are lonely. They want to have somebody to talk to. They'll answer the phone if they're elderly. Next thing you know, they're getting scammed out of their money. Please, 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 if you know an elder, talk to them, help them, be their confidant, be the one there to support them. And if they don't want to work with you, find a financial advisor they can talk to that will work in their best interest to help keep them safe so that their heirs can be taken safe as well. Potential predators and those at risk, right? Again, family members, substance abuse problems. Got a lot of that in our society, gambling, other problems. Stand to inherit money, maybe they want to take it in advance. Fear their inheritance might be used up. I've seen this firsthand. Sell mom's property, move her out of there. She's going to blow through all the cash on the equity. We need to move into our house so we can save our inheritance. It happens. You know, had a negative relationship with their elder. Maybe they want to just get their money because they fear that they're going to be left out of the will. And then the other one is you don't get along with your siblings. It can be a fight. You want to take advantage of it. Telemarketers, again, take advantage of the isolated and lonely, suffer the loss of another spouse, pet, they're ill. They haven't been managing their money for years because it was always their significant other that did it. Right? There's always people looking to take advantage of people in these sort of circumstances. It's sad. Look for it. If you see it, report it. Okay? Ask questions to determine if they're vulnerable or not. Take steps to protect them. There's eldercare.gov that will go out and do an evaluation to see if your elders should be protected. Okay, examine their lifestyle, protect them from it. Sometimes they need help. They might not want it. They need it. Help them out. All right. How can you be more careful in employing elderly caregivers? Elderly need care. Go with a reputable employment agency. Okay. Check the background on the person. Make sure that all the financials around that person is secure. Don't have their credit cards, checking available out and able to be grabbed. People sometimes are weak and will take it. Make sure everything's written down. Service agreement, a log, hourly, caregiver expenses. Make sure it's all written down so there's no question as to what actually happened. And if something did happen, you got a log of when someone was there. Again, insurance, why do you need it? It protects you and your family from loss in case something happens. Prevents you from having funds set aside for everything. And it keeps you from going into debt if you need to borrow money for something. Insurance, we don't like to talk about it. We need it. It's important. Make sure you get properly covered. Life insurance. Have some. The worst thing that I hate seeing always on social media is a GoFundMe page for somebody who passed away. Life insurance can cover that usually pretty simply and easily and usually very cheaply. And set your loved ones up in case something happens to you in an untimely manner. Health insurance. Got to have it. Nobody likes to have it. It's expensive. However, health insurance is there for the unexpected and the expensive. Cancer, big surgeries, heart diseases, major things is what health insurance is there for. It's not there for you to go to the doctors on a regular basis. Understand that health insurance doesn't cover everything. It covers unexpected and expensive. That's what it covers. Homeowners, renters insurance. Make sure you've got homeowners. If you got a mortgage, they make you have it. Renters insurance. I had a house fire when I was in college. All my stuff got destroyed. We got a check to replace it. It's important. Have it. Cover your stuff. Auto insurance. Again, if you're driving, it's usually required. Make sure you get good coverage, especially for underinsured motorists. I had bad coverage. Cost me hundreds of thousands of dollars by having bad insurance. Talk to somebody, find out what the actual risk reward is, and get good auto insurance. Disability insurance, something often missed by people, and 1 in 4 people are going to be disabled at some point in time in their life. Usually this is a big distraction from where they want to get with their finances, and it puts them off course majorly, sometimes irrevocably and irrevocably. They can't get back from being disabled. If you had insurance, it could have covered you, not everything, but at least giving you peace of mind to get through that tough time. Then liability insurance, again, this is the umbrella policy. It can cover you in case of a lawsuit. Usually good if you got a lot of assets. Take it out, it'll cover you, keep you safe, keep you safe. Determine your needs. Everything depends upon your circumstances. Again, it may be required. Own a home, got a mortgage, you need homeowners insurance. Drive a car, you need car insurance. Question is what level you need of that. Okay. Service members in the family, ask how company handles deployment. And at the end of it all, shop around. Don't just go for the first person you talk to. And don't fall for all the TV car insurance of saving money. Shop around. Do the research yourself. Figure out what's best for you. Plan for unexpected life events. They're unexpected, so you don't know they're going to happen. But you know something's probably going to happen. The car is going to break down. How it breaks down, I have no idea. You're probably going to need new tires in the future. Plan ahead, have money set aside. It gives you control over your money in a time of crisis, and it helps to avoid financial disaster and setbacks on your financial plan and your goals. Have money set aside. It will help you in the long run. I always recommend at least $10,000 in the bank. Why? Because if you have a car incident, costs you $3,000, you take it out of that savings instead of putting it on a 20% credit card. 20% credit card, it's going to cost you an extra $600 a year. Don't fall for it. Having money in the bank actually keeps you safe and keeps you in a better financial situation. Long-term care. You got a whole presentation on long-term care. It's not just for the elderly. It's for a lot of people. There's a lot of facts. There's a lot of myths. You might need it at any age. It's complicated. Talk to a financial professional about it. If you got questions about long-term care, it may be something that you need. It may be very crucial for you. Again, potential disasters, natural disaster strike. If you're not properly prepared, can cause a lot of stress. Have the insurance in place to make sure that you're covered in case something out of your control occurs. They do. Floods, fires, hurricanes, tornadoes, earthquakes. Have things in place to keep you covered. What to have ready for in case an emergency does happen. Okay. You want forms of identification, checkbooks, deposit slips for last month when you're going to start to, you want to have those available in case things go wrong, right? You got identity thefted, you want to have all that information. You want to keep your ATM, credit and debit cards safe. You want phone numbers for financial institutions. Put them in your phone. Put them in your phone. You have a lot of ability to save numbers these days. Nobody remembers phone numbers anyways. Put them in there. Have your account number stored someplace, or have the access online to be able to get into the accounts with logins and passwords. Again, you can use your phone, use your computer to get in, get the account numbers. And you want to make sure if you got a safety deposit box, your keys are in a safe place. So you always have it ready. Where to keep things and what to consider. Important documents, make copies. Birth certificates, make copies. Have copies of driver's license. Put them online somewhere. Passport, have it online. Okay. What do you want to keep at home? What do you want to keep in a safety deposit box? have a fireproof box at home, right? Airtight, waterproof plastic bags and containers in case it floods, something happens. It's safe. Sign up for direct deposit with your money. Don't have the check come to you. Have it go directly in the bank. I love automatic bill payment. I don't have to worry about it. My budget, I set when the money's going to go out. I know what's going out. I know I'm going to have my money in my account. I don't have to worry about paying the bill. Happens automatically. Internet banking services. They're wonderful, convenient. Do it on your phone. They usually have an app now. Do it online. And always review your insurance coverages. Make sure on an annual basis you're reviewing them to make sure you know where you're at in case something happens. And also, life changes. You might need more insurance. You might need less insurance. You never know. Do the reviews. All right. How financially prepared are you? Consider your situation. Answer the question. If you don't know, maybe you want to talk to someone, have them ask you some questions. I'd be more than happy to walk through that with you. But you can do that in the participant guide. Okay. Hopefully, you've learned now a little bit about keeping your money safe and all your documents safe. You've learned enough to hopefully have some questions too, though. You're going to have some questions because your situation is going to be different than just the generic presentation I give. Hopefully, if you have some feedback, I'd be more than happy to hear it as well and hear from you. But again, we want to wrap this up with what you've learned. Hopefully, you've learned a lot. I know I've thrown a lot at you. Hopefully, you've learned some of the laws and regulations that protect your money and your deposits. You've learned a little bit about elder financial abuse, learned a little bit about identity theft, and you've learned a little bit about the insurance to help you manage your risks. Spent a good time on that, and talked about the importance of being financially prepared. Again, my name is Chris Shea. Hopefully, we've helped you now to learn a little bit about keeping it safe. Got any questions? Again, feel free to reach out. I'd be happy to talk to you.